Welcome back to Real Estate Investing with Alex Deacon. Once again here with the great Deacon of Real Estate, Alex Deacon, in front of a live studio audience.
Hey! Thank you. Thank you. Please.
The adulation.
Ladies, no panties this time.
The celebration. You know, I mean, people were here to... the love is just in the room, Alex.
Yeah.
The love is in the room tonight.
Yes.
So, Alex, everyone, if you're listening to this, you're listening to us on either Apple Podcasts, Google Podcasts, Spreaker, you name it, Facebook, Twitter. You found us somewhere online. And, guys, today, the great Deacon here and myself, we're going to talk about making money out of thin air. And I think everybody here in this live studio audience wants to know how you can make money out of thin air like a magician. What do you think, good sir?
Oh, yeah, absolutely. We're going to talk about making money, making something out of nothing. That's what we're going to look at. And that's where, you know, most, I think, entrepreneurial spirits become super wealthy, as they see something that we don't see. Okay. You know? In this case, we're going to focus in on, you know, real estate. Mm-hmm. And that's looking at, it's visualizing a property and saying, well, I could do something different with that. You know, but again, I always talk about real estate IQ. You have to know, the more you know, the more creative, like the more educated you are in this business and more experience you have, you can be more creative like an artist and see, like, I always amazes me when I see somebody like start drawing like a horse or something, right? And I'm like, they start off and I would start with the head. But they start with like the foot.
It's like an oval.
Yeah, and then end up with a horse. It's just incredible. It's like that commercial where that lady's painting the elephant upside down. Did you ever see that commercial? Mm-hmm. It's like you don't know what it is, and then she finally turns it over. But that's what educating yourself and being really good at what we do here. And you can look at a property and see something completely different, which can exponentially increase your return.
There is an art form to it.
Absolutely.
It absolutely is an art form, yeah.
But this is art mixed in with... It is art. It's also mixed in with just education and having the experience and seeing other people do different things and knowing that, oh, okay, I remember that multi-billionaire did that on a larger scale with that, so why can't I just shrink that down to something more palatable, and we can do that here, you know?
And the good part, I believe, in a great art comparison, just like we always say, is, you know, just like with art, you can't always go with your heart. You have to go with your head, or you have to take emotion out of the situation, you know. So, taking emotion out of the situation, Alex, help us make something out of nothing.
All right, so we'll do a good example here. This is accidentally, I fell into this, and literally just recently, like weeks or a few months ago. And this is nothing huge where I'm going to be a multi-millionaire because of this one thing that I accidentally fell into. So I bought this building that we're in with a partner. And we decided to subdivide it. Just basically, I mean, we're joined at the hip. This building is one. But it sits on different lots. So we were able to go to the borough and say, hey, we'd like to subdivide this building. So this parcel is now mine. And then this other half is my partner's.
Okay.
So it's like, okay, cool. But what that did financially was, like, this building maybe is worth $400,000 by itself. Okay? But split up, it's probably worth $250 each side. Okay. So we created, just by doing that, we spent $4,000 or $5,000 in engineering costs and surveys and things like that. Folks that, you know, you have to go through a process to get something like this to work. And actually we'll probably spend about 10 because we've got to do some electrical work, make sure everything's divided as far as electrical bills and such. But so we'll spend $10,000 and create a $90,000 profit.
Wow.
Yeah, that's the beauty of it. And as this was accidental, we had known, I really wasn't thinking about doing this to create wealth for myself in the long term, but this is creating $45,000 of wealth for me and $45,000 for my partner, right? So we're going to own them separately, but you see how we out of thin air, we generated a $45,000 increase in my own balance sheet.
Talk about a win-win.
Yeah.
Wow.
And that was an accident. complete accident. I mean, so just one way to do it. So subdividing in a lot of cases is the way that's done. Like now I've never personally done this, but I've seen people turn like a large apartment complex. I think this is done probably on a larger scale, more often than you think. But I think these huge developers, they might come in, they'll build a huge apartment building, okay? Like hundreds of units. And then they'll rent them for 2 years, 20 years, 10 years, whatever. Then what you can do is, if you know what you're doing and this is all set up right from the beginning, I guess you could turn those into condos. Okay. So those units, let's say you built them at $50,000 a unit, okay? And you could sell them today, like right after you built them, for $70,000. Okay, so that's a $20,000 profit if you sell them. So if that developer says, I'm going to go ahead and just sell these now, I'm going to make $20,000, I'm going to pay a real estate agent to sell them, yada, 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 I might end up with a $10,000 profit, okay, of which I'm going to pay Uncle Sam a large portion of that, because that's considered regular income. Okay. So let's just say that developer's going to make $7,000 a unit now by selling them, versus this apartment building. Let's get everything rented, and let's say it's just cash flowing a little bit. Let's just say for example, informational purposes, that it breaks even for 5 years. Okay, break even. Now, when you break even on a multi-million-dollar project, you are getting some huge tax benefits, right? You're able to write off a lot of stuff and depreciate that asset over 27 and a half years, so you get to write off a big chunk of depreciation every year. So even a break even is a profit. On top of that, if you consider the area we're in Pittsburgh, the average appreciation overall is about 3%. So in 5 years, let's say that $5 million, let's just use it per unit. So $70,000, if they're worth $70 now, in 5 years, let's say it's going to be worth another $15,000, so $85,000. Okay. So now this person who owns this massive complex decides, I'm going to turn this into condos and I'm going to sell them individually, one at a time, a little bit at a time. Now you're selling them for $85,000. Okay, you have no holding costs, because if you were buying them, creating condos and selling them, they're sitting vacant. And how do you think that mortgage payment gets paid every month? It comes out of that developer's pocket. Right. So every month they're just writing a check. No income coming in, writing a check. Where on the apartment building, it's rented, right? And let's say you get 2 or 3 vacancies, you decide, okay, these 2 or 3, or this one building out of 10 buildings, I'm going to turn those into condos. And then you start selling them individually. So now you were going to make, you got $50,000 into it day one. You were going to sell them for $70,000, but now wait 5 years. I'm going to sell them for $85,000. So now your profit went from $20,000 gross profit, which was going to net you, what did we say, 6 or 7? Yep. Okay. Now it turns into a $35,000 profit. Okay. Of which you're going to pay an agent and all that stuff. So let's click off $7,000 there. Okay. So now you're down to a $28,000 profit, and you only pay capital gains on that. And your capital gains tax is a lot less than regular income tax. So let's just say that's $8,000. Let's guesstimate. So you created a $20,000 profit from a $7,000 profit. Wow. You went from 7 to 20.
That's a big jump
in 5 years, and you got all those write-offs over that 5-year period. So all the income you were making on your other ventures, that loss, so to speak, because of the tax benefits, was offsetting your income. It's huge. Yeah. That's how you can create massive amounts of return by just sometimes waiting. and having your plan in place to change that apartment complex to condos. That's just one example. And it's a huge example. I do that on a much smaller scale, and I'll give you another example of that. We bought a house, and we rehabbed it. We had a little bit of trouble selling it. Just hit the market wrong, maybe timed it wrong. Certain things happen. I've talked about this one before, I think. But I feel the property is worth X dollars. And I know it is. And I think we just need to wait and hold on to it. So my thought is, instead of selling it now and making a $20,000 profit and paying regular income tax on that of 35%. So let me get the old calculator out. What I do with it? Here it is. So $20,000 profit now times 0.35, because that's what we're going to pay. We're going to pay regular income tax on it. We're going to make $13,000 right now if we sell it. Okay? Versus, hey, why don't we do this? Let's hold on to it for 3 years. It's going to go up to it's a $170,000, $160,000 home. It's going to go up to probably $190 in 3 years. Ish. Okay, $185. Okay? So we're going to sell it in 3 years. $185. We're paying off the mortgage balance every year, so it's going down also. And I forgot to add that on that condo scenario. Remember that. So remember our balance was $50,000 it cost us to build?
Yep.
After 5 years, we might only owe $40,000. So that's even a greater spread.
Okay.
So in this one, I'm bringing it down back to earth where the average, you and I and the average investors working on single families and a couple duplexes and such. So in this single family home, we're only going to make $13,000 if we sell it now, right? Net in our pocket. Mm-hmm. Versus, hey, let's hold on to it for 3 years. It's going to be worth $185,000. So that just took us from $20,000 gross profit to $35,000, right? Mm-hmm. On top of that, our balance is whatever our balance is. Every month we make a mortgage payment on a 20-year note. It's going to drop off. Let's just do real quick. We'll do some real quick math here.
Some quick math?
Yeah, quick math. Let me go to my handy-dandy quick math thing here. I'm just going to do a quick loan amortizations of what we owe on it over 20 years and see how much principal we pay down in a 3-year period. So we'll get a much closer, accurate assessment of where we'd be. So our mortgage balance is about $120,000 now. We're going to be, let's see, our balance is going to be $112,500. So what that means is we're going to be $8,000 wealthier then also. Okay. So our balance is now $112,500. We sell it in 3 years. We're going to make a $35,000 profit plus 8. That's $43,000. And we're only going to pay capital gains tax. And I think it's right around 20% now. So let's just say it's 20%. So that's minus about $8,000. 43 minus 8 is 33. Oh, whoa, hello. It's 30. Somebody help me. That's 35,000.
35?
35,000. Okay? These are really rough ballpark. Please don't get your calculator out and then email me and say, yeah, look, your math is way off. But here's the general concept here. We went from making 13, right? And sometimes it depends on who you are and where you are financially. Sometimes you need that 13. Mm-hmm. You need it now, so you need to sell now. I don't need that 13 right now. Mm-hmm. So let's hold on to it and let's turn $13,000 into 35. Okay? Because I don't need that 13.
Right.
Okay? I mean, the other way to look at it is, here's the other thing you need to factor as you're doing things and looking at things differently. What could I do with that $13,000 though? So if I sold it now, and just take the 13, that's called opportunity cost. What is that $13,000 being tied up costing me? What could I do with that 13? Because I could make money with that 13.
Right.
You have to factor that in too. But the other thing you can factor in, this is the pros and cons of it, is, okay, so if you have a line of credit, let's say you have 20 properties, and you have a blanket line of credit.
Okay.
So now you can use that 13, even though you're not having it in your bank.
Right.
So that's see why it's way more beneficial
tricky,
to buy and hold and be able to use that money if you can get a line of credit somehow to encompass all of your principal that you have in all your properties, and use that. So that's how I went from $13,000 profit to $35,000, and that's how you can increase your dollar per hour worth as a real estate investor, right? Because you want to I want to make more per hour just like anybody else,
right?
And that's how you do it.
Figure out ways to do it.
Yeah, and that's just one way. There's so many other different ways to make something out of nothing. And maybe what we'll do is we'll do another session on this and talk about maybe land developing and other things like that. But this is cool stuff. I'd like to expand on this, but I know we're running out of time today.
Yeah, land developing is going to probably be pretty beneficial. Yeah, this was a lot of information. This was good, my friend. I hope everyone at home took something from this, because this was informative.
Audience, let's ask the audience. Audience, was this helpful to you? Yeah, that's what I thought. Yeah.
Now, isn't Alex Deacon the man, the Deacon here?
Oh, absolutely.
Give it up for the Deacon.
Thank you.
Now, what about your great host here? Wow, actually getting some clapping. Come on, no one's really clapping me here. There we go. That's the crowd that I know and I love. So, Alex, is there anything?
Hey, wait! I have to be honest. We really don't have an audience here. I just went online and I was just using the internet, so I apologize. I can't be dishonest.
Fourth wall break inside of a fourth wall break. That's like 16 walls. But Alex, is there anything else that you wanted to kind of sprinkle on top? This was very informative.
But I think we should do this again and expand on it.
So look for another one coming on. Yeah. So we're going to expand on this one. Making money out of thin air. Listen, basically, guys, just making something out of nothing. This one was more, we're talking about like subdivisions, talking about different ways that we could do that. We're going to talk about land developing, it sounds like, in the future, and maybe, expand on it some more. Guys, for Alex, the Deacon, the genius here, Alex Deacon himself, everyone here at DHRE and myself, thank you so very much for tuning into this broadcast. We will be back next week with further episodes, and make sure you're checking us out on Apple Podcasts, Google Play Podcast, Spreaker. Just type in Deacon Hoover to your favorite podcasting service, and you should find us. Also search for us on social media, and make sure you're checking out dhrea.com for all of our listings. Thanks again, guys, and we will see you next week.